Today we're focusing on the quality names to watch and be ready to pounce on them when the market turns. Gary Glover is reiterating that a small pullback is more likely and the year to end higher is the most possible outcome. With 6 trading shares to look at today, we've got a lot to cover, and the man guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
Well, we've got a lot to do. We'll go through the leading indices, we'll go through the portfolio, and we'll go through the trading shares for this week. But I will take the opportunity to say that for our viewers, if they're finding your reports and these videos helpful, they can support our channel by liking the video. So thank you to those who have already been liking the video. But with the market falling in the last couple of days, the ASX has fallen more than the international indices. It's probably a good point to look at the portfolio and ask you, what have you been doing with the weighting? How invested are you? And what are you doing to manage the portfolio when it falls as quickly as it has?
Yes, I think we're about 74% invested now, but I've been sort of stopped out on a couple of things there. So, yeah, so probably just because it's a pretty choppy range bound of market here, Chris, I've probably been keeping a lot of the stops sort of in that sort of 3 to 7%. So not going too wide here. Don't want to expose myself to any big losses there, and also on the targets as well, keeping those sort of in those ballparks as well. So it's a few slightly bigger targets, but generally sort of some of these stocks there, like things like the banks and stuff there. I mean, they have a 15%, but that's going to be quite large for them. So like a lot of those stocks seem to be sort of caught in these sort of 15 to 20% price band. So if you're capturing like maybe 12 or 15% of that, you're probably doing quite well. It's interesting. It's quite indicative of inflationary type markets. So if anyone goes back and looks at, I think we showed the 40s and the 70s historically, those were quite volatile markets, but the market kind of stood still over time. But what you did see there was big swings up and down here, and we're kind of seeing that with a lot of the sort of the top tier sort of stocks. So so it's just interesting we're sort of seeing that. So I just think you just got to make sure it's just risk management there, Chris. Just sort of risk reward there, making sure that if you're wrong there, you're not going to get buried, and then if you're right there, you're sort of locking in a gain. But it's kind of adjusting to the environment. I know sort of Minervini will often, if it's a really sort of if the market's on, he'll his risk parameters might be a little bit wider, but if it's a sort of it's a harder, I think it refers to a hard penny environment there, is probably going for sort of smaller gains there. So it's still pretty choppy here, but still constructive for mind here. Just seeing some pretty decent swings here, some markets there, but that also means they can swing back as well. So yeah.
Well, if we look at the NASDAQ for a leading indice, it has been on a tear. It's come out of that cup and handle that you identified. And then from a measurable kind of thing, it's already come back, broken the more recent swing high, got through that. And then it's had an inside week. So what's your reading and interpretation on the NASDAQ now?
Yeah, so look, I'm still sort of pretty bullish there. I just think you probably get you might get a few consolidation periods there. So I know looking through the third years and also the pre-election years and stuff, the sort of second half of the year, they sort of climb sort of more slowly, and there's a few little dips there. But as we've been sort of highlighting, I mean, most of the drawdowns in those sort of third years and pre-election years are pretty small. So usually, I mean, there hasn't been any more than 2 to 5% here in the last sort of 60 years. So that's what I think will come down here. It was pretty interesting last night because we've had about 4 or 5 down days now in the NASDAQ, and last night obviously the NASDAQ was down there, but I think for every 4 that were down, there was 9 up last night. So people have been talking about this breadth being missing in the market, and obviously there's been this drive here being a little bit centered around a few stocks there. So all the sort of heavyweights that have been driving this market they're starting to cool off here, but everything else is actually starting to sort of move higher here. So it's good to see, the actual breadth in the market there was actually pretty positive last night. We're starting to see more stocks going up, even though the index went down there. So I thought that was pretty interesting. So, but yeah, just not seeing, even our market as well has been pretty choppy. we had a pretty decent down week last week on the XJO. I mean, if you actually look at Friday's volumes for a lot of the heavyweight stocks there, for what was a pretty wide range day, the volumes were quite light. So not, looking a little scary there on the chart there, but no conviction in the selling. So that's typical of what we sort of see on the NASDAQ, S&P. We just haven't seen too much sort of breadth on those sort of down days. So yeah, so look, I know we've sort of got, I think our RBA governor's been a little bit slow to react here. So it's probably going to, we're unfortunately going to experience a little bit of hardship here, and because those rates really needed to go higher earlier, and now we're sort of probably getting them at the wrong time. We should have got them when everyone was flush with cash, but yeah, interest rates are going to go slightly higher here. It's going to put a bit of pressure on. Obviously, retailers are under the pump here, but definitely some value in there. Just might see some slightly more downside in those retailers as well. I think you're probably, I still think 85, probably 90% of the damage is done. One of those stocks there, so might see a little bit more weakness, but not too much more. And if you go back and look at those sort of 70s and the 40s periods there, the value shares, stocks that sort of low PE, sort of high yields, they typically did pretty well. So those, if you are concerned about inflation there, that's still a pretty good sector to be in. I'm still seeing a bit more on the growth side here. That's been the outperformer so far, which is not typical of a high inflationary environment. So the market at this stage is looking sort of more positive, that we are going to get through this inflationary period. So that's a good thing for me. So it'd be interesting to see how we end up at the end of the year. I still think we'll climb high here, just be a bit messy.
Well, another one to look at is the S&P 500. It has been moving higher. It did have that overhead resistance that you'd flagged, and then you talked about the compression just underneath the high, which was a great David Ryan kind of trading setup. But now we've been talking about this trend line, which is becoming a bit of overhead resistance that we're now coming up to. So what would you expect to happen here on the S&P 500?
I think it'll hug it a little bit there, Chris. I think it'll just the momentum will slow, so it won't go up as fast here. But I think it'll, like it's done in the past, it'll probably hug the trend line a bit. And there might be there's got to be a few little down weeks in there as well. But again, historically, we haven't seen too many. We might see a few weeks down here, but I just don't think we're going to be too deep. We're going to be quite shallow. So I think if we see something like 3 or 4% pullback on those US markets, so you probably have to be buying that, to be honest with you, based on the last sort of 60 years sort of cycle there on that. So look, that's what the cycles tell us. We still got to follow the price action. If the price action, I mean, you've got to be prepared to be wrong. I'm not always going to be right here, but the price action is the key. And technically, we're seeing much better volumes on the up, lighter volumes on the pullback there. We're starting to see breadth improve here. Just all the starting to see so many more stocks in sort of stage 2 as well. So basically breaking to new highs there. Just very constructive price action, Chris. So it's going to be messy, but I think overall it's still pretty constructive.
But the last indice for us to check in on is Dow Jones, which is more of the old world one. You're saying that growth has been performing well, so kind of expect the Dow Jones to be lagging a little bit, which the chart is showing. It's really just sitting under this high and but it's coming up and compressing and sitting tighter. You've got a nice arrow that's implying a bit of a rally could ensue. Is that the same thing? You're looking for the market to end the year higher and only a mild pullback?
Yeah, I think it's sort of, it's up near the high there, sort of congesting up around the high. That NASDAQ's been on a bit of a tear there. So obviously the Dow started first early, so it sort of started classic sort of, those value sort of shares are more, stronger in inflationary periods. So inflation's starting to sort of ease here now, so that's probably helping the growth there. But I just felt like maybe that, some of those inflationary pressures in Europe sort of still lingering might sort of give the Dow a bit of a kick along here. So, and it wasn't surprised last night to see the Dow only off a couple of points there, while the S&P and the NASDAQ are off slightly more. So I think, just think the Dow looks pretty good here. Again, look, it's, just looking for, just not seeing any heavy selling there. So again, just got to be guided by the price action here, Chris. The price action is sort of, we're having down days here, but we're not seeing any heavy selling there. I say that was amazing that last night. Obviously, NASDAQ of 150 get twice as many stocks going up. So that's a good sign. So
that's good, solid breadth. That's a lot of market participation in different levels. So not just the large, massive caps or majors.
Yeah,
but that it's going all the way through.
You want that. Yeah, you want that too, Chris, as well, because you sort of want the big caps. Will generally sort of do the heavy lifting initially, and then they move, and then people look to sort of de-risk or not de-risk. They take on more risk, so maybe move to mid caps, and then once the market's really firing, then you move into small caps. So small caps have still been lagging here, so that's usually sort of final stages sort of stuff there. But yeah, we're probably starting to see probably some of those mid tiers sort of start to outperform here now. So yeah, that's those are normal sort of healthy signs, I think. So yeah.
Well, an interesting statistic I read this week about the Aussie small caps versus pretty much the rest of the world small caps is that on average, the international small caps have a market capitalization of double the Australian. So if we're talking about it, the small caps internationally still underperforming. I guess our market with a fair few micro caps in comparison has a way to go, especially the smaller indices.
Yeah.
But that probably takes us into your trading shares for this week. And you're talking about price action. A study that you've been doing and looking at for some time is IPOs. So not just ones at least in the first month or two, but having an understanding of common behaviors we can see from IPOs. So do you want to walk us through sort of that and how it's relevant to Endeavour?
I was actually listening to one of the Trader Line. I think it was Life Cycle Trader. I think she's actually written a book on IPOs and different paths that the IPOs take, and they do sort of categorize them into different type of patterns, different type of setups there. But the interesting stat was that I think 82% of IPOs over the last 20, 30 years, I think have sort of undercut the first day's low within the first 39 weeks. So sometimes the IPOs, they start off pretty hot, go for a bit of a run, and they invariably come back and retest the low. And that's something I've noticed actually with a lot of the ASX stocks as well. So I think in the last 3 years, it's like 93%. So even more on the IPOs in the US. But definitely noticed that in the Aussie stocks as well, a lot of them sort of come on hot. It's usually sort of, when they first come on, there's a lot of hype and a lot of marketing as well, and very active in telling the stories. Everyone gets excited, pumped up, and then after a while, the news sort of dries up, and you go back into the normal sort of, maybe you get a quarterly or half yearly sort of update. So the news sort of dries up, so the luster sort of runs out. So just notice that it's a sort of normal sort of cycle for a lot of stocks and for IPO stuff there. So just notice, Endeavour is a little different here in that it's really sort of spun off, but it is another IPO. It was pumped up early as well, and then now the sort of news has sort of dried up a little bit, not as coming as often, and the share price has come back quite a bit. So it's come back to retest the 22 low. I don't know if it'll come back and retest the opening low. I thought, well, if it gets back under 580 there, I'd be buying, definitely be jumping in there. But I noticed that it sort of bounced here last week after sort of retesting that previous 20 days. So it's gotten pretty close to the low. It's not quite there. But yeah, there's some decent volume there last week. Decent volume the last few weeks as well. So it might be signs of accumulation there. So definitely want to keep an eye on here. Endeavour, been beaten up a little bit there. Pretty decent sort of quality company in my opinion.
Well, you mentioned earlier the 40s and 70s inflationary cycle, and the indices going for a bit of a sideways churn, as well as the banks and some of the large caps sort of just being volatile, but not really gaining much. So if we look at Ramsey on the chart, going back here 2019, the inflation hadn't really kicked in, but we're still kind of range bound, right? It's just hasn't gone anywhere. So
pretty volatile. Just even looking at Combank, which is probably one of the more stable stocks in the market there, it's been up and down in the ranges as well. So same thing happens with some of these healthcare as well. So like Ramsey, the consensus earnings for the next couple of years is I think about 30-40% growth for this year, and then about 30-40% growth for 24. So expected to perform a lot better in the coming years. Obviously, it's been disrupted by COVID quite substantially. So the market's a little concerned that it's been a bit slower, this sort of turnaround than they would hope. But yeah, still got a pretty strong growth outlook there, I think. So yeah, I do like the sector there. Just under a little bit of pressure price-wise, but yeah, so definitely watching this one pretty closely there. It is a sector I do like there, longer term there. Starting to see volumes elevate a little bit, so maybe signs of accumulation there. Just probably want to see some support there. Did see a little bit of timing there the last couple of days down here at the low here, but that timing can be flawed as well. So we probably want to see sort of signs of a reversal here, but yeah, definitely starting to look pretty interesting here down those levels.
Now, if we move into agricultural companies and agriculturally exposed, we look at elders, got a pullback of 90% of the last rally. So it's almost given up all of those gains in what's been a pretty fast fall. What do you look for now after seeing it do this rally and then give most of it up?
Yeah, it looks a pretty horrible chart there. And so, you're catching a falling knife here, which is a bit risky here. But if you go back and look, go and grab like a 30, 40-year chart of elders or go back as far as you can there. Its very nature is to have these V-shaped moves up and down. And so it's almost, we're talking about trend trading, Chris. This is the classic sort of trend trading stock here. Once it gets going, it really motors and probably overdoes it. And then, once it's on the decline, it really motors on the downside and probably overdoes it as well. But really, it's a really, really trending sort of stock there. So, I know gold can kind of get, maybe all stocks can get into that big trends as well. But yeah, elders is definitely, a high beta play. So basically, what high beta means, if the market say moves 1%, this might move, say double that. So when it's on, it's really on, and then when it's off, it's really off. So, but yeah, this thing's sort of falling pretty hard here. Just the volumes are up here the last 4 or 5 weeks. So possible accumulation sort of stepping in here. Look, it's hard to sort of catch these sort of falling knives there, but yeah, I think this is pretty interesting here. Yeah, I saw an interesting stat actually last week. I don't. It's a little bit off topic here, but 166,500 is how many people die every year. Is how many people die every day, Chris, on the globe. Now the other number is 360,000. That's how many people are born every day on the globe. If anyone's seen any population charts, global population, mate, they are just, it's like that, a bit like elders when it's on fire. The chart is, really, it's, mate, human beings are breeding like rabbits. I didn't realize how much, how insanely aggressive the population profile is for the globe. Yeah, it just made me think, gee, resources, food, no wonder people have been talking about this space here for a while here. So obviously they were talking about it, the last couple of years on the way up here. No one's talking about it now that it's going down. But that, those numbers are there. It's quite, quite compelling. It's sort of, you look at those numbers there, it puts a lot of the other stats to sort of to task. In that when you've got numbers that fierce, it makes a lot of stats irrelevant, if that makes sense. But yeah, look, but I think this is, technically here, this is one I'm keeping an eye on here. Probably want to see some signs here. Maybe look for a first higher low, sort of, look for like a little B-wave break. Look, have a bounce, come back, maybe go to a new high there first. So, but definitely one to be sort of keeping an eye out here. Just because it's probably getting pretty close here, and it is one stock. Once it starts to move, it really trends pretty hard.
Well, it reminds me of book Hot Commodities by Jim Rogers, which is talking about the growth, the demand for commodities, and so on. And famously, his quote was that farmers be driving Lamborghinis. And I don't know if you've seen the prices of what farms are going for in Australia. It's notably different to what it was only a couple of years ago. So They might have been right. But sticking with agricultural companies, this one's been going up faster and coming down slower. So they shot up. They sort of almost like an exponential type curve going on here. They hit, kind of you blow off top maybe, or overextending. And then what's this behavior that we're seeing here?
Yeah, the one thing I didn't show on the chart there is that just because it goes back a lot further, is if we go back to sort of the 2020 low up to the high there, it's actually about 50% of the range there is that sort of low that's come in. So it's a big 50% correction price, a fairly decent size correction. So 50 or 61.8, I would consider pretty large sort of pullback when you're looking at these sort of weekly ranges there. The last thing on the chart there is sort of that sort of washout low. We've had an impulsive bounce, which has gone above the previous sort of swing low on the way down. So that's a good sign there. And now we've sort of pulled back there. The first couple of weeks of that pullback, volume was really light. And then only the last couple of weeks, we've actually seen volume pick up here, which is sort of down the lower side here. So could be a possible inverse head and shoulder pattern. Not that I'm a big, head and shoulder sort of guy, but just looking at the price action there is interesting there. So I think if it sort of can hold this sort of support zone here in the next week or two, pretty interesting. So just need to show some support here first before we look at that. But just interesting that the ag sectors all come back here, all on the nose there. So that's sector to be watching closely here, I think.
Well, if we go from staples, things that we need, food, commodities, and then we go to other side of things, entertainment, we've got EVT. So this is a choppy chart going in here. How do you see this progressing?
Yeah, it's just a big correction in time there. It's a big sideways consolidation there. So, it's a rally for 2 years and we pulled back for, almost 2 years here and we've only come back half the range. It's actually holding up really nicely. So, it's like a pennant flag sort of, if we look at our sort of longer term sort of charts there. But last thing in the chart, there's a nice bounce out of that marginal new low. And now we're sort of pulling back here, really light volume the first week here. So I think you might sort of see maybe a week or two of pullback here. But as long as we don't see, if we see this sort of maybe drift lower here, Chris, and volume is pretty light, that'll be encouraging. So really, it's sometimes there's more told in the counter trend actually than in the trend. So if we see that little pennant or flag here on lighter volume there, that'll be good. So I know there's some concerns around inflationary pressures, how that might affect discretionary spend. So that, but I think I think the people aren't going to go. I saw the big lines at Perisher there during the week in the limited snow. So everyone I know is going to Queenstown to the snow as well. So that's going to be packed. I'm sure Victoria and Snowfield's going to be the same. So I think the movies as well. I think that's sort of something that people will get back into as well. So I don't sort of see. I still think it's a pretty robust sector here. So regardless of inflationary pressures there.
Well, the last one on your list for this week is ACL, so Australian Clinical Labs. We've got a couple of interesting aspects to look at on this chart. First, I see a bit of a parallel to what you've spoken about for weeks with the duration. So 5 weeks up, 10 weeks down. But also interesting in your commentary here, they were making a bid for Helios. And as you said, not many companies that are half the market cap of the acquirer usually get the deal over the line. So is that feeding into the chart as well?
Yeah, so sometimes when you got sort of these corporate events overhanging a stock, it's best to sort of leave them alone because you sort of don't know whether they get it over the line or not, how it'll be impacted, things like that. So I think this will be, I just can't, I think if it gets over the line, everyone will be surprised and they go, wow, it might be positive. And then if it doesn't get done, everyone's probably thinking it won't get done already. So I'm sort of struggling to see the downside here at the moment in the stock here. I'm just not sure there's any going to be, a bad news surprise in here, I guess, either way for a result. But technically we just sort of saw a nice bounce there, and it's kind of gone above that little swing high the way down to. I like to sort of see that the old highs broken. You just don't like to sort of see a consecutive lower highs sort of stack up back to back. That puts you sort of upward trending down. But once you sort of see that old high taken out, then you see a congestion like this, twice as much time here. It's pretty interesting here. So yeah, so I do like this here. Twice as much time here, hasn't sort of gone to a new low here. And those volumes have been pretty light for that period as well. So, I think once we get some clarity here, where either or here, I think I don't think either decision's going to be seen as so negative for the stock. I guess that's probably what I'm trying to say there. So, I think once we get some clarity there, get maybe the uncertainty out of the way, the share price might be able to go back up again.
Well, that's a good way to look at it, and possibly a good catalyst to see a change in direction for ACL. And that rounds out the 6 trading shares that you've added into this week's report. So I'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Now, if you've liked Gary's insights, sharing his report, you can like the video, which supports the channel. If you want to see more about what he was talking about with the 40s and 70s inflation, where Gary's unpacked that whole, he's done a whole lot of analysis on it. We've covered it previously. There's a snippet over there in the trading strategies and the like, which also covers false breaks, VCPs as well. And there's also the 30-30 list, the Friday playlist, where Gary looks at and unpacks the charts and describes the top 30 momentum companies, as well as the top 30 launchpad stocks. And then finally, on the left-hand side is Gary's Twitter handle if you want to follow him there.